Are we today? So I have not updated my Bitcoin analysis in 3 weeks. As you can see here from my previous video, we had an all-time high of around 121k and we were just retesting the trend line. Now in that video, I talked about my theory as to whether I thought the bottom would actually be in, and as you can see, the bottom was in at the time. We wicked a bit lower, as I said was a possibility that could happen. And after that wick lower, we had this huge move up. If we jump over to the daily chart, you can see we held the 50 TMA on the daily. We bounced off it once, twice, and up we went. Made a new all-time high. However, we had 9 days straight up. We saw a huge sell-off. I think that was like a $1.1 billion liquidation day on the market. And obviously, we had a dead cat bounce, a very weak dead cat bounce for that matter, and we just sold off again. Now, as you can see, as we have now been getting successive daily closes under the 50 TMA, I generally say around 3 daily closes under the 50 TMA means a very high chance of another leg down happening. Like sometimes you'll get one daily close under the 50 TMA, big bullish engulfing candle the next day, and you might feel like an idiot getting in, I got out at 105k and I have to get back in at nearly 109k. But you have a look at the probabilities of the move going back up, like almost every single time that's happened, we've had a follow through move. So, yes, you're buying high, but you're selling higher. Like all these things here, and here. But now we have seen 3 successive daily closes under the 50 TMA, and yesterday, I believe the Sunday afternoon, Sunday night for you Americans, Monday morning for us Australians, we saw this absolutely insane 15-minute candle bar. Like, what even? That is a almost, is it 4,000? $4,200 move in 15 minutes. Now, if we have a look at the very short-term time frames, we have actually seen a pretty good recovery. We are holding back above the 50% of the breakdown zone, which if you watch Jason and Michael's videos, you will know the 50% is a nice level to be holding above. And if you watch any of Peter DeCarlo's videos, Traders Helping Traders, you'll understand the 786 to 826 Fibonacci is where big money likes to sell. So retail panic sells into big money, they buy it all up, and then they sell it here. Now, I believe it has something to do with psychology, where you don't want all of these people here to be able to, who bought here, that are now sitting in a loss, to be able to sell at a break even. Because if they all sell at a break even, they might capitulate the price. So what big money wants to do is big money wants to basically not let them sell at break even, so they get to sell instead and keep the profits. Anyways, enough of that talk. What do I think is going to happen next? Well, looking at the weekly chart, you can see we've rejected once, twice off this smart money zone. So it's pretty logical that retail was panic selling the tariff trade lows right into the hands of institutions, smart money, etc., and they're taking profits right now, whilst retail is FOMOing in. Now, we can see, unfortunately, the weekly BX trender has turned red. Now, historically, this usually means a multi-week sell-off. As you can see here, if we backtest a little bit, it generally leads to, at least another attempt lower. Now, it doesn't have to lead to an immediate sell-off. You can see sometimes you'll get a decent rally, like, you might get like a 10-15% rally, but it generally means lower prices are incoming. Like here, the weekly BX trender flipped red. We didn't see another red week, but we saw this nice wick down, which was, about 10%, followed by a nice rally. So the probabilities state that next week is very likely, well, unless in the next 9 minutes we somehow flip the BX trender green, which I believe would require a close above $117,000, which I think is pretty unlikely. $4,500 bar in 10 minutes twice today? Yeah? No? Anyway, but if we have a look back here at what happened when the BX trender went red on the 6th of January, after we'd seen a nice move up, similar to what we've seen here from the April low. That January run was, of course, coming out of Trump's election win. You can see the BX trender flipped red for the 6th of January week. We had an attempt lower the next week, which took out the previous week by only around $2,000, so about 2%. So if we see another attempt lower next week and we come down to, 108K, 107K, the levels that Jason talks about in his videos and a lot of other decent traders also talk about in their videos, like Peter DiCarlo in his weekly newsletter, not necessarily his videos, you can see we get that attempt lower, but then we get this massive push higher. Like, that is a $20,000 move, like a 20% move. And based on where we are in this cycle, we could see the cycle top within the next 2 weeks for Bitcoin and crypto. Like, if you watch Jason's videos or Michael's videos, a top around, September, October isn't fully out of the question. So something like that, like a wick down to 107, 108, 105K next week. Whoops, did not mean to move that. Followed by, the next 2 weeks seeing a big move up to something like 130K, maybe 135K, retest this trend line from the underside and roll over from there as a cycle top. That is a possibility. Now, one thing I am discounting is obviously Jason talking about how we could have a shorter than normal bear market, and rather than being, a full year down after a theoretical September/October top, we instead get, 6 or 7 months down because of where we're sitting in the bigger picture cycle. Now, this might also agree with what the Traders Helping Traders newsletter states this week, because you can see on the weekly chart, we're getting some divergences. Now, it's pretty similar on Bitcoin. You can see we've been making bearish divergences as price has been grinding higher from the May tops. So it's very likely this, quarter or cycle, should I say, is approaching the top. And we might need to see quite a drawn out correction before we see a final blow off move, which could mean a left translated cycle for the next cycle after a couple of months down for Bitcoin and cryptos. Now, the stock market could very much likely do something similar to that, because the monthly BX trender. Now, I'm not going to repeat what Peter says, because you can go read his newsletter or his videos, or just pause my video here. But what I think could happen is we could chop all the way through to the end of the year and rally next year, because it almost seems that everyone's expecting a end of year rally, which is kind of what we were talking about last year as well. Like, in November, like, everyone was talking about like a Santa rally for the stock market, but price really went nowhere. So who knows? But for now, the trend is down on the daily chart for Bitcoin, the weekly chart for Bitcoin, and if we jump down to the 4-hour chart, you can see we've just been getting these massive, massive volatile swings. And if you remember what Michael says, large swings are more characteristic of distribution than reaccumulation. So you can see here, like, when we're reaccumulating, the swings are generally a lot smaller and the lows are getting higher rather than lower. So it's very possible that we may get another sell-off, as I've been talking about. And after that sell-off, we could get either a short-lived rally for a couple of weeks, like, still a very tradable move, like a 25-30% move up on Bitcoin could send, your large cap altcoins absolutely parabolic, and your meme coins, etc. But something just doesn't look right in the market for me right now, which is why I'm trading with a bit of caution personally, but obviously do whatever you want, it's your money. Now, onto the 1 hour chart. It's the same story as the 4 hour chart. Like, you can just see this downward pull on the market as the lows are just getting lower. And any news pump is just sold off into. This was Powell's speech. Huge $4,000 move up. Like, 4,000? Actually, no, it's a $6,000 move overnight. Like, absolutely huge volatility. So, if we jump over and have a look at the market data, you can see we do have a big bias to the short side, and it's more than 3%. So Michael would talk about a potential snapback incoming. Volume is picking up. If we jump over to the daily exchange volume, you can see we have made a higher low. So that is a good thing, but we've also made a lower high. So as Jason says, it's very possible we are in some sort of extended consolidation phase before we get a rally in the next few weeks or months. Now, having a look at the Fear and Greed Index, we are in neutral, which if you have watched some of Jason's videos in the past, looking at the 2021 cycle, when the market starts to go really parabolic in the end stages of the cycle, you may not actually get as many resets into fear or extreme fear as you did in the earlier stages of the cycle. So sometimes it'll just tap neutral and then just keep going. Like every dip gets bought up, which is what sort of accelerates the move into the end of the cycle. Having a look at the Bitcoin FOMO Finder on Alpha Analysis, which is something Michael used to use before he switched over to the TIA exclusive one, you can see that we have seen a extended period of panic on the market, so -2. And historically, if you're buying when the market is in panic, it's usually speaking, you're getting a pretty good discount. Now, you may get sold off into, like you might be holding a losing position for another couple of weeks, but historically, if you're buying on panic, within a couple of, weeks to the month or two, you should be in a winning position, which comes back to my analysis on the weekly chart that we could see either a rally into a lower high, followed by a extended drawn out consolidation, something like that, or we get a sharp sell off next week, followed by a rally into a cycle top. Now, the only time where buying on panic doesn't really pay off is when you've had an extended period of greed and you're buying up like the first dip. And we just haven't seen that extended period of greed yet, like in this move up. Like we were seeing it last year, like with the Trump stuff and all of that. And obviously we were seeing it in the ETF hype, like in March of 2024, as well as obviously around the 2021 peaks. But the market just doesn't feel that greedy right now, in my opinion. So that is what obviously leads me, Michael, Jason, Peter, all our top analysts to think there is higher to go. But where we are in the cycle, we may not actually have that much time left. So if we have a look at the cycle timing for Jason and Michael, they have talked about how every cycle has been getting a bit shorter. Like we went from 1,100 days for the first cycle to around 1,060 days for the 2017 and 2021 cycles. So if this cycle ends just over 1,000 days, we're over 1,000 days now. And if we get, another 2 or 3 weeks up into a final top, that could be it. Anyways, if you didn't get any conclusive analysis from this video, I do apologize. But for once in my life, I am actually pretty confused myself. So thank you all for watching, and good luck in the markets. I will update you if anything else interesting happens.